Hello everyone, thank you for joining us today and welcome to this educational presentation of the right way to trade pullbacks in virtually all markets. Now pullbacks are a very popular way in which to trade. I would say just about over half of all traders like to trade pullbacks, but in my opinion most of them are trading incorrectly or don't have the correct tools in which to do so, because most traders really struggle with finding out whether a stock, a future, or a currency pair has begun a new trend or is simply going to stop and move in the other direction. For example, let me show you what we mean here by looking at this chart. Now, a lot of traders would look at this monthly chart of Triple L and say, wait, Steve, there's really no way to determine what we're doing here. In fact, this may even be some type of a topping formation. We have a double top here. But what I'm going to be teaching you today are the preliminary entry rules for a pullback strategy that actually would have generated a buy right here at the very bottom of this sell-off, and potentially you could have been able to capture upwards of 75 points. So we're going to show you all this as displayed on our new PTS Primo charting platform. I developed this with Pro Trader Strategies, and it's really designed to teach traders how to trade. We keep it as simple as possible, where everything you need is simply one click away. So welcome once again. My name is Steven Primo, and before I begin, I just want to apologize for my voice not having that much power. I'm still fighting a cold, and I wanted to present this today, so I apologize if I'm not speaking loud enough and if I cough and lose my voice from time to time. But I really want to present this on this Saturday morning because I believe it really will impact your trading, and we're going to give you the preliminary entry rules to this strategy. Now, if you're new to my presentations, I've been trading for 40 years now. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist. So that's where we get the name specialist trading. Doesn't mean that you're any more special than anyone else. A specialist was simply one that made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a stock, you had to go up to the trader who specialized in that. So if you ever see those pictures of the traders on the floor, where they're yelling and screaming, there's lots of paper all over the front of the floor, the people behind those podiums were specialists. That's what I did for 9 years. I traded and made markets during the crash of 1987 and the bull market that followed. So I've been about in every market environment you can imagine. I've traded straight up, straight down markets, sideways markets, and I've also traded just about every system, every technique, every method you can think of. So there's nothing new under the sun. I've seen it before. We've just given it different names. So I know what works in terms of consistency, and I know what doesn't. So about 8 years ago, I teamed up with Pro Trader Strategies. We formalized specialist trading, which is the educational division of the company. And all I do is teach and mentor my students around the world in over 110 countries and in virtually every state, all of the things I've accumulated in 40 years that have shown high levels of consistency. So we are first and foremost an educational company. We're not promising to have the best system. We don't promise to make you a millionaire in 6 months like so many other sites do. We just want to educate you because that is what will sustain you going forward. So I have a great presentation today to educate you on how to really trade pullbacks correctly. But before we begin, I ask that you please take a moment to view our disclaimer. We're required by law to show you this, so please take a moment to view it. I'm going to share with you a lot of performance results using this particular strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And once again, all the examples I'm going to share with you are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite you to follow us on Twitter. You may want to copy down our handle there. Every day I post different information, anywhere from little bits of wisdom I've accumulated along the way to help you financially, to actual signals that our strategies have generated. For instance, the strategy I'm going to be sharing with you today generated a fantastic buy signal in the British pound a couple of days ago, and we posted it on Twitter. So there's a lot of great ways to get more information about us, so feel free to follow us on Twitter. Okay, so as I stated in the very beginning statements, we are different from most companies in the fact that our only goal is to educate you. We're not here to tell you what market to trade. I'm not going to tell you, well, you have to trade this specific market because this is what's hot right now. I'm not here to tell you what the perfect time frame is to trade. I mean, on a daily basis, I get emails from students saying, Steve, what's the best time frame? And I always say the best time frame is the one that makes you feel the most comfortable, because that's not my job to tell you how to trade. My job as your mentor is to teach you how to trade with all the things that have shown consistency, and then work with you so that you can ultimately devise your own trading plan. If there's one thing I've learned in 40 years, is that no two traders should ever trade alike. And if you don't believe me, just look at the statistics for profitable traders. It's been estimated that upwards of 80% of all traders fail. And by failing, I mean they lose all their money in the first year. And our industry is based on people mimicking what other people do, or having the best system in the world. Just all you have to do is take these signals blindly. All you have to do is follow me in a chat room. And if we were, so inclined to follow someone else who's supposed to be a master trader, then wouldn't it be the figures? Wouldn't they be the other way around? Wouldn't 80% of all traders be winners? But it's the opposite. And it's, as I stated, the truth is that you shouldn't trade like someone else. You should be given the tools, the methods, and the techniques, and then devise them to meet your nature, your personality. So if you want to trade aggressively, you can. If you want to trade conservatively, you can. So that's our goal at Specialist Trading. Not to force feed you signals, not to tell you what market or what time frame to trade, but to teach you how to trade. This is the same concept that was given to me some 40 years ago when I was struggling tremendously. Even though I was on the floor and had access to all this different information that most people don't have, I still struggled. So my mentors taught me the same things that I teach my students, and I really feel that that has been the cornerstone to what's been able to sustain me for 4 decades of trading now. So hopefully I'll be able to teach you the same things that were taught to me, and you'll be able to learn how to trade with the Specialist Edge. Now, since we are an educational company, I do want to conduct this like a classroom. That means I want to take each and every one of your questions, but if we stop for every slide, we'll be here for about 2 or 3 hours. I don't want to take that time out of your Saturday morning. And at the same time, with my cold I have, I don't think my voice will last that long. So if you kindly wait till the very end of class to ask questions, I promise I'll get to each and every one of them, but just wait and hold off. Write down your questions or try to remember them, and I'll answer each and every one. The only question I will answer right now is this being recorded? Yes, it is. So if you have to leave early, or if you're having technical difficulties, don't worry. Pro Trader Strategies will send you a link to this recording, okay? So we have a good crowd here today. If you happen to join us late, remember, hold off on any questions till the very end of class, and I promise I'll get to each and every one of them, all right? Okay, so why don't we begin? Let's start off by telling you the strategy we're going to be teaching and sharing with you today. This is strategy number 1. Most of our students around the world have purchased this strategy. We taught them all the rules. This is probably our most consistent pullback strategy to date. Okay, let me share with you some of the entry rules for this particular method. Now, the highlights are, obviously, it's a pullback strategy. If you're not familiar with what that is, a pullback strategy is simply looking for a stock, a future, a currency pair. It makes no difference. It makes no difference what time frame or what direction. But let's say the overall trend is upwards. You're looking for a sell-off or some type of slump in price, and that's where you want to buy at a lower price in an uptrend. Now, if you have an overall downtrend, you're looking to sell at a higher price. You're looking for stock, futures, currency pairs to rally. And when everyone thinks it's going straight up, you're looking for a vantage point to sell before it resumes its downward trend. Now, the way we do this is by using a unique Donchian channel application. I'm going to share with you what that is because that's our only indicator. The beauty of strategy 1, it can be applied to virtually any market, any time frame, and any direction. So it doesn't matter if you're coming into this webinar and saying, well, Steve, I don't trade stocks. I see that you started out in the stock exchange. I trade futures. Well, I trade futures too. I trade currency pairs. I trade Bitcoin. It doesn't matter. This strategy can be applied to any of them. Or if someone says, well, Steve, I only trade tick charts. Or if someone says, I'm an investor. I trade weekly and monthly charts. It makes virtually no difference. That's the beauty of strategy number 1. But with all of our strategies, we tell our students around the world, please learn the strategy first. Don't just jump in with 2 feet first. Learn the strategy first, and the best way to do that is by paper trading. We will have some small losses from time to time. That's perfectly normal. I've been trading 40 years, long enough to know that some of the best traders I've ever known still have losses. That doesn't matter. What matters is that you have a method that's consistent enough to make it back. hopefully sooner than later. And that's what specialist trading is. That's the edge we have. Most of our methods have tremendous consistency where they're able to recoup small losses rather quickly. So please paper trade first, and then remember to, don't jump in right away using real funds. Paper trade and then see if this works for you. Now, I see a few questions here. I just want to make sure that everyone can see and hear clearly. A few people have stated, I'm just looking at the chat box here, that they cannot hear. If you're having technical difficulties, oftentimes if you log off and log back on again, the connection will be better. Most of the time, it's your own connection that's having trouble. So if you can hear at all, if it's coming in rather difficult, please log off and log back on. But if someone can, if a few of you can just email me, or not email me, but go to the question and answer box and let me know if you're hearing this okay. I just want to do that before we begin, because I'm going to start off right now giving you the rules and more information. So just type in yes if you're having, if everything's fine, or if you're having difficulty. Let's see. Let's see, yes. Okay, everyone seems to be good. So a few people are having difficulty. It's most likely your own internet connection, okay? So thank you very much. And once again, I apologize for my voice. Usually it's not this gravelly. It's just that, once again, trying to fight a cold, very difficult, and speak at the same time. All right, thank you for that feedback. So let's begin. And remember, once again, this is a very simple strategy because we only use one tool, one indicator. That's the 21-period Donchian channels. All right, that's it. That's all we're going to use. It's been my experience that if you go to webinars or you buy books, most of the people that have been trading for a relatively short time, and that's 5 to 10 years is really a short time, and they're instructing you how to trade, their methods are really complicated. They have a lot of indicators, a lot of convoluted logic, a lot of things you have to follow, and a lot of subjectivity. But if you look at the traders who have been trading 30, 40, even 50 years, most of their methods have maybe 1 or 2 rules, a couple of indicators at tops, and that's it. Because those are the things that work. Those are the things that have stood the test of time. So strategy 1 only has 1 indicator. That's it. And it's the 21-period Donchian channels. Now, if you're not familiar with this tool, I'll show you a lot of examples in just a few minutes. It's a very common indicator. If it's not on your platform, you can do a Google search. I know there are some free websites that offer it. If you can also contact your tech support department at the current platform you're using and ask for it. Maybe they have it on file. And if you absolutely don't have it at all, I'll show you a way at the end how you can at least use it for a little bit. But please remember that we have to have the 21-period Donchian channel. It can't. A lot of students have said, well, Steve, I don't have this. Can I use Bollinger Bands or can I use the Keltner channels? And I've experimented with both of those and a number of other tools, and they just don't generate the same results, okay? There's not that consistency that we pride ourselves on at specialist trading. So I would not recommend using anything else other than a 21-period Donchian channel, okay? That's how you're going to get these consistent results here. All right, so let me share with you the rules, and they're very simple. So I'm not going to give you a list of rules to study and realize. It's much more easy, in my opinion, to understand them if we simply look at some generic charts here. And I specifically left out what market this was, what time frame, because I want you to understand the concept behind this. It makes no difference if this was a monthly bar, if this were a stock, a future, a currency pair, or if it was a tick chart. It makes absolutely no difference. But as we look at this in hindsight, well, obviously, this has been in some type of an overall uptrend, right? So if it's been going steadily higher, obviously it's not going lower. So where would have been the most opportune place to buy? Well, right here, right? At this low. So how could we have taken advantage of that? All right. Looking back in hindsight, we say to ourselves, well, yes, I would have loved to have bought there, but how could I have known to buy there? I didn't know it at the time. Well, here's where the 21-period Donchian channels come into play, because they will help us find that area. As you can see, these are the Donchian channels. They are 3 specific channels, top, middle, and bottom, and they have kind of a stair-step look to them, okay? Now, what we want to see is that in an uptrend that all 3 are headed in the same upward direction. That's telling us that we're in an overall uptrend, all right? We're not going to sell if all 3 are going in the same overall direction. Now, most students say, well, Steve, they're not in sync. This one is going sideways, while these 2 are headed higher. I don't understand. Remember, I didn't say they have to be in sync. They just have to be going in the same direction. Now, if you see a sideways bar and you're wondering, well, what direction is that? Just look at the last setting. If the last setting was lower, that means it's coming from a lower spot, so that means it's still going in an upward direction because it's like a stair step, okay? So these are all three going in the same direction, and usually what happens when you see this with any market, you'll see price still moving higher, and as it goes higher, it starts to touch the top Donchian channel. Excuse me. And as it touches the top Donchian channel, it continues going higher until ultimately it starts to sell off. This is the pullback. This is the pullback we're looking for, but we still need a little more structure, some more rules. So as price sells off, it comes lower and lower, and it touches the middle channel. It kind of intersects the middle channel, but what we're looking for is a bar completely below the middle channel. That's right here. This is our setup bar. Now the setup bar doesn't mean, well, that's the bar we buy, right? We just buy at the market? No. What we're going to do is buy 1 or 2 ticks or 1 or 2 pips above there. It's up to you. All right? So we have all 3 Donchian channels headed in a higher direction. Here's our setup bar. Now, did we trade there on the next bar? No. So there's no trade. But look what happened. On the very next bar, we're still below the rising Donchian channels. And so we can lower our entry down a tick or 2. All right, so we'll buy at a cheaper price. But we have to wait till it confirms that we trade above. So we'll continue in doing this either until we enter into the trade or until one of those Donchian channels or all 3 of those Donchian channels change direction. If they started to go lower, well, then all bets are off because the market now is going lower or they're not in sync with each other. So that's telling us that the market doesn't know what it wants to do yet. So who are we to think that it's stopping here? So we have to wait for the market to tell us what it wants to do. At this point, it's still telling us because of the Donchians that it's going higher. So we're willing to buy here. And you would have entered on that next day right here. And with pullback trades, what happens is you sell off, you get to a lower point, and when everyone thinks you're topping out, then the trend resumes upward. See how simple this is? There's no reason to look at news. There's no reason to look at financial or economic reports. There's no reason to listen to some guy in a chat room. You can do this all by yourself. That's our goal at Specialist Trading, to train you, to teach you so that you're in charge of your trading. So you don't have to spend tons of money buying these master systems, wasting your money on things that don't work, where ultimately you'll be in charge. It's been my opinion, and what I've found out in 40 years is that the only way, once again, one can become consistent in trading is by being in charge of your own decisions, not trading decisions, not having someone else tell you what to do. That's why we don't have chat rooms or trading rooms at Specialist Trading or Pro Trader Strategies, because we don't believe in that. That would be making you a crutch for you to rely on us to tell you what to do, and that goes entirely against our philosophy. You're in charge. But the way you become in charge is by being supplied with the proper information. And that's what our purpose is. Let's look at this chart, this generic chart. All right, obviously the overall trend is down, right? Looking back in hindsight, we've been going lower. We would have loved to sold this, obviously, up here. This would have been the best place to sell, right? At the very top, right before the market went lower. Now, most people would have said, well, Steve, how would I have known it was going lower? I mean, the trend was up, right? We were going up, and then the trend must have changed right here. Here's where the Donchian channels come into play. Once we apply the Donchian channels, what were they telling us? Well, all 3 were going lower, okay? So even though we had this bounce, this was not an uptrend. This was a pullback in a downward trend. That's where you want to sell. But we don't just sell at the market blindly. So the Donchian channels were telling us right off the bat that don't get fooled by this little bounce here. This is just a bounce in an overall downward trend because all 3 of these channels were headed lower. Now, as they're headed lower, price is touching this bottom channel. And then all of a sudden, we start to bounce, okay? Here's where the bounce started, right there. That bounce is not the beginning of a new trend. If all the Donchian channels are headed lower, excuse me, it's telling us it's not the beginning of a new trend. It's just a pullback to the upside. So as that bounce goes higher, we intersect the middle Donchian channel, and now we have our first bar that is completely above. So we know that we're not going to sell at the market. We have to wait for it to confirm to trade 1 or 2 ticks below. And it did right here on the very next bar. So that's where we enter to go short. And remember, we're not telling you how to trade. If you like to buy puts, that's fine. If you want to actually short the stock or the future, that's fine. It's entirely up to you. That's not our job to tell you what to buy or sell. It's up to you to decide. We're just giving you high probability entry points. So you enter right there and look at the trend. And it was all done with the help of the 21 period Donchian channels. That's why we say this tool is so important, and not to substitute it with something that you think will work, like such as Bollinger Bands or Keltner channels, if you don't happen to have them. You must have the Donchian channels in order for this to work correctly, okay? Remember, once again, if you joined us late, I will be answering questions at the very end of class. All right, so that is the basic concept. You have the basic concept of the strategy, the preliminary entry rules. Let's share with you some more examples so you can really get this under your belt, okay? Let's start out with stocks for all you stock traders. Here's an example in MVS, okay? We have all three Donchian channels headed higher in a stair-step direction. They're not in sync. Remember, this is going sideways as these are ascending. But that's okay. The last setting was lower, so it's coming from a lower setting. So that means it's headed in a stair-step upward direction. So price touches the top Donchian channel, starts to head lower, intersects the median channel, kind of bounces, and here's our first bar below. Okay, they're all three in sync, and that's our first bar below. So that's a setup bar. Okay, but we want to make sure that we're learning this correctly. So that's why we created the PTS Primo Charting platform, to check your work. Remember, we're an educational company, so we're trying to educate you. So this is a way we teach you the rules, but then you want to be able to check your work. So the beauty of the platform is that you would just come up to the upper green strategy tab, click on strategy number 1, and click on signals, and automatically it would confirm whether this was a valid setup or not. And right there you have a green arrow under that. So that's a valid buy setup. That's telling you, wow, I'm learning this. I know what I'm doing now. I'm in charge of my own trading destiny. I don't have to listen to anybody because I'm in sync with the rules, and the stock went up 6.5 points in the next 3 or 4 days. Okay? See how simple this is. We're not relying on news. We're not relying on some guy to tell us what to do in a chat room. You're learning yourself. This is the way you become a consistent trader. How about this example in BBBY? Okay, all three Donchian channels headed lower. All right, so what is that telling us? The overall trend is down. It's not telling us that, well, this rally here is the beginning of a bottom, we should buy. No, while these are going lower, it's telling us don't buy this. This is just a pullback. So you see one bar above here, and then you see the next bar above here. In order to confirm it, you click on strategy number 1 tab. Yes, there is a sell arrow there, so you know you're in sync. You know that is a valid sell signal. It's not guaranteeing you that it's going to work. I'll show you a few examples in just a few minutes how we have some losses, but it's just sharing with you that you are in sync with the strategy rules. And almost 8 points in the next month to the downside. Look at this large gap down here. Did we know that there was some news or some event that was going to cause this to go down that much? Absolutely not. The market told us. So many people rely on news and fundamental news to tell them if a stock is good or bad. It's been my experience that the market usually tells you in advance. So even though, you know, we're not telling you that you can't listen to news, it's in no way required. I stopped listening to news 40 years ago, and I'm still here. So you don't need it if you really don't want it. You have to discern what it means. All right, some more examples. JP Morgan, okay, all three channels headed higher. Starts to sell off, touches the middle Donchian channel, rises above, but then here's our first bar below, okay? Is it a valid buy signal? Yes, it is. The bars are still rising, the channels, so we step in and buy, and in a week we make nearly 3 points to the upside. Now here's an example of consistency. BECN, this was actually an example of 2 trades. The first one was a loss or break even, depending on where you wanted to place your stop. We have 3 Donchian channels headed lower. Now this one we didn't go back far enough, but trust me, it's coming from a higher spot. And a sell signal was generated here. These were all sell signals, but this was where you would have entered to go short. And on the opening, it opened down here, so you're short. And look what happened. We went a little bit lower, but then we went back up. And most likely you would have been stopped out, okay? Because it really didn't head right away in your right direction. But the Donchians haven't changed. They're still headed lower. And so we have another setup right here. So you've been stopped out, you lost on the first one. You know, real traders don't lick their wounds and you know, become a victim and say, boy, this stuff doesn't work, I'm throwing. They go back and they say, well, if I really believe in this, if I've paper traded enough, if I studied it, it does have a high level of consistency, so maybe the second trade will work out. So the second one generates a sell signal, and that one worked out, nearly 10 points in the next month, okay? So that's what we mean by consistency. You would have made back that first loss and been able to recoup those losses and made even more, depending on where you wanted to exit. Here's an example in VRSN. All the Donchian channels are headed higher. Excuse me, we're going lower in price. Here's our first bar below. Okay, so that's our first setup bar. We would have purchased up here if we traded there, but we never did. So here's our next bar below. All right, the Donchian channels are still headed higher. So now this is our setup bar. We're going to buy one tick above there. It's a valid buy signal as confirmed by the platform, and nearly 4.5 points, 4.25 points in the next couple of weeks. All right, QCOM. This is a great example of going short. Once again, we have all three channels headed lower. Most people would have thought, well, this bottomed out, Steve. It's a double bottom. All the institutions love this now. And the chat room I go to, they really like this stock, so I've got to buy it. Well, you see how that decision is based off on all outside sources telling me what I should do? What is the market telling you should do? Well, the market is saying the Donchian channels are headed lower, so we're still in an overall downtrend. Until one of those changes directions, the market is saying it's still in a downtrend. And this is just a bounce. This is just a pullback. So there's our first setup bar. We couldn't go short because it never traded below. Here's our second. And remember, this is a $50, $60 stock. You could have purchased puts. It makes no difference how you wanted to enter this. But this was your entry point right here to go short. And the stock fell 5 points in the next couple of weeks, 3 weeks, a month. And obviously something came out for this to go drop down lower. We had no idea. But once again, the market tells you what it wants to do. So don't get caught up in listening to outside sources. Remember I said, the industry is run by you mimicking what other people do, either through a signal service, going to a chat room, listening to some trading guru on TV. And if these things work so well, then 80% of all traders would be successful. But the numbers are the opposite. So what does that tell you? It tells you that you should never trade like someone else, that you should trade according to your own rules, according to your own beliefs, okay, your own persona. So just listen to the market. Trust things that have worked over time, and then make your own decision. Don't ever rely on someone telling you what you should buy or sell. That's a recipe for disaster. All right, now we have another version that we teach in our course. That's an aggressive version. Times when the market have a lot of volatility, when there's a lot of movement, they will not go above that higher, that middle Donchian channel, or not go below that middle Donchian channel. So a lot of times you'll sit there and the markets are really moving, and you'll miss a lot of really good signals. So this is for more experienced, more aggressive traders, but we have the aggressive version that doesn't wait for a bar to be entirely above, as we see here in this example right now. The aggressive version just says the minute you touch that middle Donchian channel, that is a valid setup. So you can go short, all right? So you would have gone short 1 or 2 ticks below, and you see how you would have captured that strong downward move in DKS. Now that's because you don't want to miss an aggressive version. Now here there was still a conservative entry you could have gotten into, but you just, it's for aggressive traders. This can work also to the upside as well. And Apple, here's a weekly chart of Apple. Now price came right the way down here. Now if we're using the original conservative version, we say, well, we have to wait for a bar to be completely below the rising middle channel. But if you're an aggressive trader, you don't want to wait for that. You want to wait for just bars to touch the middle channel, and you would have purchased 1 or 2 ticks above and 17, 18 points in the next couple of months. Now, had you waited for the bar to be completely below, you would have missed this nice move on a weekly time frame. So once again, we're just throwing out these different ways. How you decide to trade is up to you. I'm not going to tell you that one is better than the other. My only suggestion would be, if you're beginning to trade this, I would stick with the conservative version first, just so that you lower your chances for having these losses, because many times you'll get whipsaws with this aggressive version. But it's up to you. You're in charge. Remember, not us. Here's a weekly chart of Fossil, FOSL. Once again, people would say, boy, this is the beginning of a really nice uptrend. We've got a great bounce here. All the institutions love it. The volume is picking up to the upside. You've got to buy this. Don't miss this huge move. It's going to make new highs, okay? Well, what are the Donchian channels telling you? Well, the Donji channels are saying we're still in an overall downtrend, so I wouldn't get sucked into this rally. And we have 1, 2, 3 setup bars using our basic format. That's a valid sell signal, and right back down. See, this is why even though you had a nice bounce there, you don't want to get sucked into it, because most likely you would have lost money holding on to that position. It's much better to be in sync with the market. What was the market telling you? That this is just a bounce in an overall downtrend, that it's more conducive to being consistent to sell as opposed to buying this. Here's a weekly chart of Nike. Same example. Once again, it looks like a bounce, but the overall trend is lower. Even though someone would say, but Steve, we broke out above this high here. How can you say, well, the Donchians are telling us we're going lower, and nearly 10 points in the next month, okay? Now here's that first chart we share with you. This is the monthly chart of Triple L. All right, a lot of people would say, well, oh, this is rolling over. There's some bad news on this. We've been going down for the last 6 months. I wouldn't suggest purchasing this. Well, the market is telling you that this is an overall uptrend, even on a monthly time frame. So we've got a nice pullback going here. Here's our setup bar, the first bar below the rising middle Donchian channel. So we want to buy 1 tick above. Even though it's a monthly bar, none of the rules change. That's a valid buy signal as confirmed by the platform. 75 points you could have potentially taken advantage of using this particular method. Now here's the XIVs. This is the inverse VIX index. This measures fear in the markets. And so a lot of people say, well, Steve, can I apply this to ETFs or to indexes? Sure. Here's the XIV. The same rules apply. It makes no difference if we're looking for the inverse VIX index. All 3 Donchians are headed higher on this daily graph. We have a huge sell-off here based off volatility and momentum. Most people would think, oh, this is going lower, but what are we seeing here? We have our valid setup bar right below a rising Donchian channel. So if you're trading this, 16 points in the next 3 or 4 weeks. Let's look at an entirely different market and some different time frames to show you that it's not just a stock strategy. As I said earlier, this can be applied to any market. Here's a daily bar of the E-mini futures. The same things apply. The Donchians are headed higher. As we touch the top, we start to sell off. We intersect the rising middle channel. We're continuing to intersect it until this is our first bar below, entirely below the middle bar. That's our valid buy signal. If you're trading the E-mini on a daily basis, or if you'd like to use this as a directional tool to tell you what the market's going to be doing, because the E-minis are just based off of the S&P 500, and if the S&P 500 is going to go higher, well, don't you think the market will go higher? Well, 55 points in the next month, okay? That represents just hundreds, if not thousands of points in the Dow. Here's a 1-hour chart of the E-mini for all you intraday traders, okay? The same concept applies. All 3 Donchians are headed lower. Here's our first bar entirely above the descending middle Donchian channel. So we want to go short, 1 tick below, 21 points to the downside in the next 2 days. That's about over $1,000 per contract. If you had, potentially you could have captured if you had taken advantage of this, okay? Now let's go to even smaller time frame. I know a lot of you trade smaller time frames. Let's look at an aggressive version on a 5-minute time frame of the E-mini. All 3 Donchian channels are rising. We see price start to sell off, and we're just touching this, barely below, but still touching the middle line. If you feel this is a very volatile market, you don't want to wait, you could buy 1 tick above. That's 8 points to the upside the next hour. That's roughly $400 per contract, okay? So we've shown you daily, hourly, 5-minute time frames. Let's go to another market. Let's go to the currency pairs for all you forex traders, okay? Let's start off with the Australian dollar. Here's the same example. You notice that none of the rules are changing because we're changing markets or time frames. Everything is the same. All 3 Donchians are headed higher. Price descends, intersects the Donchian. We have our first bar below, so this is our valid buy signal. 450 pips, or between $4,000 and $5,000 per unit on the currency pair, okay? Now, you had all that potentially to work with. Now, price begins to sell off, and you have another setup, okay? If you missed that one, here's another setup you could have taken advantage of, a quick 100 pips to the upside as well. Now, that's to the upside. To the downside, here's the Canadian dollar. A lot of people were thinking, wow, this is really going straight up. Look at all these up days where we closed up. Out of the last roughly 10 days, majority of them were up. Well, don't get sucked in, because the 21-period dodging channel was telling you that this is just a bounce in an overall downtrend. In fact, this was a valid bar to go short. Even though it closed towards the high, you enter to go short 1 to 2 pips below and 230 pips in the next week or two, okay? $2,300 per contract. So let's recap before I lose my voice entirely to this cold. Strategy number 1 is a very consistent pullback strategy, as you've just seen. By consistent, we mean that not every trade is going to be a winner, but it has a kind of 2-step forward, 1-step back approach. The beauty of it is that I've shown you examples in stocks, E-mini futures, and forex currency pairs. But this doesn't leave out commodities. It doesn't leave out Bitcoin. It doesn't leave out indices, ETFs. Virtually any market where there's a trend always creates some type of pullback, and you can apply this to all of that. Now, the main thing about this strategy is that you must rely on the 21-period dodging channels. Trust me, I have experimented for decades trying to use other indicators just to see if it's simpler, because I know a lot of people aren't familiar with the 21-period dodging channels. You will not get the same results. It doesn't make it as easy to see when you are below or above that rising or descending middle dodging channel. So it must be with the 21-period dodging channels. If you don't have it, ask your tech support to furnish you with that. If they don't have it, do a Google search, okay? Remember, any market, any time frame, any direction. So it makes no difference. I don't want you to think that this is a stock-only method or a futures-only method. But with all of our strategies, all of our students around the world, we always stress to learn the strategy first. I know a lot of you, your eyes may be lighting up thinking, this is amazing. I'm going to start using it Monday morning. Please, I would suggest not doing that, because most likely you'll lose money. The reason is you haven't studied it enough. You'll implement it incorrectly. You'll think all 3 of the Donchins are headed higher, and then you'll forget that maybe one of them went lower, and so it was out of sync with the other 2, but you bought anyway. So you have to really paper trade in order to fully understand the process behind the strategy, all right? Our edge here is consistency. I'm not going to sit here like some other guys in webinars do and say, oh, you'll be able to retire by the end of this year trading this method. I don't believe in that. If anyone ever tells you that, I would turn off the computer or run, because it just doesn't exist. I mean, it's ridiculous. Think of any athlete doesn't hit a home run every time he comes at the plate or make a basket. Not every entertainer has a hit movie or an album. That's just not the way life is. There will be small losses from time to time. That's okay. The only thing that matters is if you have a method that you can trust to make it back, and then hopefully to make more. So that's what we promote at Specialist Trading. Now, as we go to the conclusion here, I'd like to ask you a question, and ask yourself honestly. We just ended the last year, 2017. We're in the first 2 weeks of the new year, 2018. Okay? Now, most traders start out the beginning of the year with all these hopes and aspirations of where they want to be. And through my experience, myself included, when I first started trading, you will know by the first 2 or 3 months whether you're ever going to reach those goals. You'll see that you're nowhere near where you thought you'd be. You're losing more money. In fact, you may be doing worse than you did last year, okay? That's all right. Most traders go through this. That's why most traders fail. It's been estimated upwards of 80%. How would you like to get your trading back on track for the new year? We just started 2018. Do you think this strategy could have helped your trading this past year? Do you think it could have helped you at all with any of the markets you trade, or any of the types of time frames or different directions you like to trade in? Well, we have a great offer for you today. This is our special attendee discount for all of you taking time out of your Saturday morning to join me today and to listen to this presentation. We have a great offer that's going to include our PTS Primo charting platform. All the examples you saw today were generated on our platform, which literally was designed to teach traders how to trade. Remember, we are an educational company. Our only goal is to teach you how to trade with the Specialist Edge. So we're going to offer you the PTS Primo charting platform, a 30-day trial, which includes strategy number 1 for only $7, okay? That's a great, great offer, because this usually would be upwards of over $100 and close to $200 actually with the strategy included. But let me show you what's offered. We're not going to just give you strategy number 1. Obviously, you're going to get all the up and down arrows to confirm the rules, but you're also going to get the course as well. You're going to learn all the entry, all the stop placement, all the exit points. I know once we get to question and answers, that'll probably be your first question. Steve, where do I get out? Where would I have exited? Where would I have placed my stop? That's all in the course. Remember, this webinar today was designed just to share with you the entry rules to this. But that's all going to be included with the PTS Primo charts. We're also going to include 2 entry techniques. We call these steps. These are proprietary techniques I learned on the floor that you can apply to any strategy, any method. If you're having difficulty with your entries, let's say you have a strategy that works pretty good, but sometimes it gets you in too late or gets you in too early. You can apply these entry techniques and it will give you high probability points of entry for any method, any system. We're also going to be giving you our enhanced buy sell line. Now, I've given some Saturday webinars talking about that. If you're not familiar with the enhanced buy sell line is, it is probably the most powerful tool we have at Specialist Trading, and it's so simple. Let me show you what it is. It's called our buy sell line, and basically, as you can see here in the upper left-hand green strategy tab, all you would do is click on the buy sell line, and one of the features is our fluid feature, which automatically colors the back of the screen either blue or red. If price is in the buy zone or blue background, that means that regardless of what method, what trading technique, what system you're using, you should only be buying. And you should not be selling until we go into the sell zone. Do you see how we could have kept you out of trouble with this technique? And you can apply this to any market, any time frame. It makes no difference. It will automatically show you what the buy zone and the sell zone is. So right off the bat, you're in sync with the overall trend. And it works on the downside as well. Here's that old other chart of FOSL. Remember, once again, we were in the buy zone. And a lot of people with their trading will say, well, boy, this is so oversold. I've got to buy it. That trading room I go to says it's never been this oversold before. So this is the way most traders trade. They'll listen to somebody tell them what to do, and they'll buy somewhere around here. And look what happens. It continues to go lower, and all of a sudden you've turned into a long-term investor, right? Well, you would have known right here that you're in the sell zone. So if anyone was telling you to buy, you would have said, why are you telling me to buy? We're in the sell zone. We should not be buying anything in the red sell zone. Anything in red background should be looked at as a short. And you don't wait to purchase until price goes back into the buy zone. So that's going to be included. All this is included with your 30-day trial. We're also going to include something else that I have a pet peeve about. It's signal scanners, okay? If you've heard me speak before, I've used just about every platform out there, anything you can think of. I won't mention any names, but I've traded with just about every platform out there. And one of my pet peeves is the ability to generate a simple scan. So many times these platforms have scanning capabilities, but it just is so convoluted in how to get a market, how to get the data, how to apply your strategy, how to get the right indice or the exchange. It'll take like an hour or two just to find out what the signals were. I'm so proud to know that I work with this with Pro Trader Strategies. We made it so simple that it takes you less than 30 seconds a night to figure out what the signals are for the next day. So once you're a member of the Strategy Number 1 course, as you will be on this trial, you can simply go to the scanner page, click on Load Symbols up here in the upper left-hand corner, and we provide you with a series of different baskets, ETFs, NASDAQ, S&P, currency pairs, futures, whatever one you're interested in looking at, and in a matter of seconds, they will all appear on your screen, depending on which market you chose. All you have to do after that is simply hit Scan, and in about 10 seconds, you'll see a series of green and red horizontal lines. The green simply mean that that's a buy signal in that particular stock or future or currency pair that you've looked at. The red simply means that that's a sell signal for the next day. And this whole process takes less than 30 seconds. That's how simple it is. This is included in this $7 offer. If you like to tinker under the hood, we also have over 90 technical indicators to choose from to work with, all right? So you can use other different tools to help you devise your own strategy if you like. Now we know that our goal is not to tell you how to trade. Our goal is to teach you how to trade. And now if some of you love to look at fundamental news, that's fine. We're not going to tell you that that's wrong. It's just not required. So therefore, we have included free Bloomberg TV. We have a media page that all you have to do is click on the media page and you will get live Bloomberg TV. So any economic report, any earnings report, anything you're interested in learning about, you can have this running on the side while you're looking at the charts, okay? And then lastly, it comes with personalized tech support. If for any reason you can't pull up a chart or you can't get the strategy up and down arrows, we will be there to answer and resolve the issue in a matter of moments. So this is all included for only $7. You can experiment with it for 30 days, see how it works for you, use the scanner, use the proprietary buy and sell line on whatever market you're interested in, and you can also use the free Bloomberg TV live to get the information live as it's happening. This is all for only $7, and I would almost venture to say that most of you lost more than $7 just trading yesterday in commission costs, okay? So this is a great, great offer, and you're not committed in any way. So after 30 days, you can either cancel or decide to go on board with it. So it's entirely up to you. There's no obligation to stay on after. You will not be recharged after 30 days, okay? So here's how to access that. It's so easy. Contact my sister site, Pro Trader Strategies. I developed the platform with them. You can email them right there, or probably the best thing to do would be to call them if you have any questions at area code 310-598-6677. Now, if you're interested in just signing up for that $7 deal, go to the link at the very bottom. The only problem is you'd have to copy and paste that link onto your browser because that's not a live link. But there is a live link in the chat box on the far right of your GoToWebinar column. So all you have to do is click that on and it will automatically take you there, okay? If you have any difficulty in accessing the page, the sign-up page, or if you have more questions, you can contact Pro Trader Strategies about the platform and they will be happy to answer them, okay? Now, as I promised, I would answer your questions concerning what I taught you today. We have about 10 minutes left, so thank you for holding off. Let me open up the question and answer box, and I'll answer your questions right here in the order they were presented. Let's see. Please explain the difference between the Donchian channels and the Keltner channels. Well, I can't go into detail about the inner workings of each, particular indicator. All I can tell you is that they're displayed a little bit differently, and they just don't, because of the way they're displayed and because of the way we're waiting for price to be above or below, you don't generate the same signals. So that's what we're interested in. We're not so much interested in what the inner workings of the indicator are. We're more using them as a tool to tell us what the overall direction is and then as a price point. So that's all that matters. The only trouble is I can't rely, there's not that much consistency on the Keltner channels or the Bollinger Bands giving me that consistency of what the overall trend is and as to where to put my entry point. So that's why the Donchian channels help the most. And once again, with this $7 offer, you have the Donchian channels right there. They're already pre-canned. There's nothing you have to edit. There's nothing you have to, find or search for on your own platform. It's right there, okay? Lulu was asking what time frame. Well, I don't understand what you mean by what time frame, but this can work for virtually any time frame. I've shown you 5-minute charts. I showed you monthly charts. So it makes no difference what time frame you're using, okay? Moss says, hey, Steve, the Donchian channels has only 2 bands, no middle band. How do I place a middle band? How can this be used? Well, I know that some platforms only provide, you're probably using a different platform, but you should have the 3rd middle band. I would suggest doing a Google search. I know there are some free platforms out there, but for $7, why not get the best of the best, in my opinion, for this method? And that's simply to purchase the PTS Primo charge for $7. I mean, it has the middle band. It has everything right there for you, okay? I know a lot of platforms do have the Bollinger Bands, and they don't have that middle band. Now, when we were constructing and putting together this platform, that was one of our main things that we said we have to have a middle band, okay? We cannot just have an upper and lower. Let's see, how can this be used in intraday trading because I do futures only during the day? Well, Winfred, I showed you 2 examples, an hourly and a 5-minute chart. So there's no difference, okay? Because it seems that this is only applicable in swing trading and not day trading. Is that the case? Well, maybe you asked these questions too early, Renfred, but as I stated, I showed you a couple of examples of intraday trading. And we have numerous students who use it on 5-10-minute charts, even on tick charts. Another question, news is important if you trade intraday. How can you discount the news announcements during the day? Well, Winfred, let me just give you an example of how I feel important news is. When I first started trading on the floor, I was in charge of making markets of 60 stocks, okay? And virtually when we traded, we were buying and selling and holding positions less than a minute. I can almost guarantee that none of you trade that way. And I was doing this with 50, 60 stocks at a time. That's why you see those pictures of people yelling with their hands in the air and paper all over the floor because it's kind of hectic at times. And when it gets very volatile, that's the way the markets are. All right. Now, I relied on news when I first started trading. Okay. And half the time I would listen to the news. I'd have all the earnings of my stocks. I'd see all the news, economic reports, and I would say, okay, that must be good news that just came out. And I'd buy something based off that, and the stock would go straight down. The other half of the time, I'd say, well, okay, that must be bad news. Boy, the earnings they were lower than expected. That's terrible. The stock's going to drop, and it would go straight up. Okay, so the reason why I don't rely on news is that it's too subjective. One trader may look at news and say, that's fantastic. Another trader may look at news and say, that's terrible. We want things that are cut and dry. How would a teacher teach you something that's kind of like, well, I'm teaching you how to play basketball, but I'm not sure if this works. It works sometimes, and other times it doesn't work. Or I'm teaching you how to play golf, and try this swing. Sometimes it works, and sometimes it doesn't. How could I teach you something that say, well, sometimes it helps to look at news, and sometimes it doesn't? So we only focus on things that are cut and dry. We know that if all three Dodging channels are headed lower, the odds are in your favor that you're in a downtrend. And we know if all three Dodging channels are headed higher, the odds are in your favor that you're in an uptrend. It's cut and dry. It's black and white, okay? So I was lucky enough to have mentors who saw how much I was struggling. And the first thing they taught me was they said, Steve, if you're an investor, if you're holding a position for 10, 20 years, yeah, you need to know about the inner workings of the company and the direction they're going, the CEO and all that stuff. If you're trading something intraday, there's absolutely no need to look at the news. And it was tough for me to grasp that concept. But once I did, things started to become a lot easier. And guess what? I haven't looked at news in 40 years, and most of my trading is intraday trading. So I'm a living example of how you don't really need it. Now, am I telling you that you should stop looking at news? No. If you feel you have to rely on it, that's great. But none of our methods rely on any news. I stopped looking at news 40 years ago. So if I'm still here trading, it's an example where you really don't need it, okay? So it's up to you. Dirk asked, do I use tick charts? Yes, I do. I trade tick charts for the E-mini S&P a lot, okay? Let's see. How soon will the recording be available? It'll be available probably within the next hour or two after this presentation. But one thing I must suggest, this is a great offer. This is only going to last for a couple of days, so don't sit on this. If you wait for the recording and say, well, I'll watch the recording for the next couple of weeks, I believe the price after this goes up to $97. So you're going to miss out on a great opportunity if you wait too long. So feel free to watch the recording, but if you want to take advantage of this $7 offer, I would jump on it right away. And after all, $7. I think most of you can afford $7. I often say in these presentations, if you're going out to lunch on a Saturday at a fast food restaurant, I'm not saying you're going out to a nice 5-star restaurant, but you're going out to lunch at a fast food place, you're probably going to spend more than $7 today. So this is a great deal for 30 days and information that's taken me 4 decades to accumulate, okay? TJ says, this is only good for trending markets. Yes, well, see, TJ, it's been my experience that that's where most of the profits are made. That's where you get the consistency in trending markets. Whipsaw markets, or ranging markets are, very difficult to trade because you go up, you go down, you go up, and just when you think something's going higher, it goes lower, so you sell, then it goes back up. So what we want is consistency in the market, and that's what trending markets are. That's the beauty of the 21-period Dodging channel. You don't have a trending market unless all three of those are going in the same direction. So it'll tell you if you have a trending market or not. Many times you'll see the top two going up and the bottom one going down. So that's telling you don't get involved in this trade. That's not a trend yet, okay? Can this be used on volume charts or with Heike ASCII chart? Well, you know what? I've never used it, Richard, with Heike ASCII charts. You can try it. I don't particularly trade them. I know a lot of people do, and I don't use volume charts as well. But feel free to experiment. It's up to you. Okay. Is the trial for the Elite platform? No, the Elite. I believe the Elite platform gives you all the different strategies I have. I have upwards of 10 different strategies. We have some other great tools such as the PET-D and other things included in that. And so that's not included. But you're getting probably more than half of the things available on the 30-day offer. And these are things great to start out with, and they're a great way to introduce ourselves to see if you like our concepts and beliefs. Okay. Let's see. We have to use your platform, and how can you incorporate the PM's chart? Not exactly what you mean by PM's chart. The evening chart. If you could ask that again, Winfred, I'm not sure what you mean. TJ asks, is this $7 charge a one-time charge? Yes. I mean, we're not gonna charge you again. In other words, after the 30 days, you can cancel. There is no recharging again. Okay, it's just a one-time charge because you're getting 30 days free access, and then we shut you off unless you want to continue. No, you don't really need a promo code. All you need to do is go to that link. Remember, in the chat box on the far right, there is a link. You just have to click that on. Now, remember, if you're having any difficulty going to the page or accessing the information, just contact Pro Trader Strategies. There's absolutely no obligation. There are trading consultants manning the phones. They'd be happy to answer any question about signing up or whatever, or you know, paying for the $7 fee. And don't worry, there's no obligation. They can give you more information. Okay. The platform is not web-based. No, you will have to download it, but it's very simple. And as I stated, we have a great tech support that walks you through. Each and every person that gets the platform, you know, we don't just email you the link and say, good luck setting it up. We have a person that contacts you and actually helps set you up online so that it's all done for you, and you understand everything that's coming through. Okay. Let's see. Where do you download a Daunting channel? Well, once again, Mandla, it's up to you. You'd have to do a Google search. I can't tell you other than, you know, you should try the $7 offer, because I know some platforms have it. TradeStation has it if you're willing to spend $300 or $400 a month for that. But we have it for $7 per month. You can experiment with that. Good morning, Steve. Great webinar as always. Steve, as you know, sometimes the stock either gap up or gap down. How would you react with regard to entry or exit? Don't you think it would work best on day trading than intraday trading? Thank you. That's a good question. But probably with gap opening, remember, usually with your broker or with whatever platform you have, you know, for actually trading, you get some type of pre-opening indication. So many times, you know, you can either call up your broker or you'll get a pre-opening indication, an overnight indication. So let's say you want to buy 1 or 2 ticks above. Many times you'll get an indication that the stock, maybe some news came out the night before, the stock is up 5 points. Obviously, you don't want to buy it up 5 points higher. So that's the way to find out. Always check the pre-opening indication, all right? And check with your broker or your platform that you're using for that. And that way you wouldn't have to worry about it, okay? You can use it for intraday, though. I use it for intraday. I trade it intraday, and a lot of traders use it for intraday on the currency pairs, because when they get those trends moving, they get those tremendous trends, and it works great on downward or upward trends, okay? Are your charts separate from the platform? How does it work? No, Priscilla, it's the platform has the charts. In other words, everything you saw today was the platform. That's what you get. In other words, the platform produces the charts, and all you have to do is click on the strategy, and it will generate the up and down arrows. So everything is right there for you. Like I said, it's all so easy. I know other platforms are so difficult. That's why a lot of people have difficulty in learning, because they make it so complicated. Our pet peeve was, we want to make this as simple as possible. Whether you're a hedge fund trader or whether you just started trading last week, you've got to be able to come and just, you know, click on the tab and generate the chart you want, and then see the chart there in a matter of seconds in front of you, okay? And we have tutorials that help you how to do this with the tech support. So it's really simple, extremely simple, okay? Yes, TJ, they're on the phones today, so if you'd like, you know, you may have to wait a little bit, because oftentimes there's a big rush, but don't worry, they're on the phones today. They can answer your questions. No, people are asking, can we execute the trade from our platform? No, because as I stated, since we are an educational company, we're just simply educating you. What a lot of traders do is they will look at our platform the night before, see where the signals are, and then apply it the next day to their trading platform. So we're not a brokerage firm. We're not telling you, you know, giving you access to buying and selling. We are strictly an educational company giving you high probability setups. You can see them the night before or intraday while they're happening on a separate screen or a separate monitor, and then apply them to your trading platform, okay? How do you get the data, real data? Well, contact Pro Trader Strategies. They can tell you what the real data is. They can tell you how to do that and how to get the real data with them. Remember, Pro Trader Strategies handles all the platform issues. I'm strictly in charge of the instructional teaching issues with the company. Let's see. Priscilla, aha. Okay, great, Priscilla. I'm glad I answered your question. I guess that means I answered your question correctly. Remember, I know there's a lot of questions as people are saying, well, can this be applied, on my computer? Is this, am I going to be recharged? Don't worry. This is only $7, and it's only going to be a one-time fee, and you get, I would say, more than half of the capabilities that are offered on the Elite platform. And we don't want to throw too much at you because, you would take a lot of instruction to learn everything. It's 40 years composited onto one platform. So we're just giving you the first half of it that we feel will be able to teach you correctly. But there's more training, there's more in-depth training, there's more strategy courses, and there's a lot of tutorial videos that will help you to understand exactly what to do. It's trust me, it is so simple though. I think most people are familiar with the way most platforms are. They think they're so complicated, and they get there and they don't even know how to open up a chart. I know exactly what you're going through. I've been there before. So that was the main motivation for us designing this, to make it as simple as possible. It is extremely simple. Everything is pre-canned. You don't have to edit the dodging channels. You don't have to click and change the buy-sell line. It's right there for you. All you have to do is click on what you want to see, and it automatically comes up. It's a great, great tool for learning. And as I stated, it took me 40 years to accumulate everything that I currently use in my own personal trading, and it's right there, one click away for you. So hopefully I'll be able to shorten your learning curve, okay? So as we conclude here, I want to say thank you so much. I really suggest, taking advantage of this $7 offer because, once again, you probably spent more than $7 in commission costs alone, okay? So in commission, if that's what you spent last Friday or maybe the entire week, you can get 40 years of training for only $7. And then it's up to you to decide whether you want to continue or not. There's no obligation, okay? So there's lots of great information, lots of great ways to learn, and I will be there with you every step of the way, answering any question that you may have. Once you become a member of one of my courses, Strategy Number 1, you have my personal email address. You can contact me whenever you'd like. So as we conclude here, I want to wish you all happy Saturday. I hope you don't get a cold like me, and I hope your voice doesn't go like me, but thank you for bearing with me, and I wish you the best of luck, but most importantly, take a chance on $7. I look forward to you becoming students of mine on the PTS charting platform with Strategy Number 1. Thank you so much. We'll see you next time. Bye-bye.